And we are live. Welcome to Staking Mondays, everyone. Staking Mondays is a weekly show to share knowledge from key staking industry leaders with our community. And of course, this is all powered by stakingrewards.com. At Staking Rewards, we are helping investors navigate the landscape of yield-generating digital assets, helping them find the best opportunities to earn interest on crypto. This is season 2, everyone. If you want to check out some of the past episodes, head on over to our YouTube at Staking Rewards. You can also find past episodes on Spotify. My name is Ken, and I'm here today with co-founder of Staking Rewards, Merkel Schmiedel, and we are delighted to welcome today's guests, some members of the Perpetual Protocol team. So we have with us today Yenwen Feng and Nick Tong. Yenwen is the co-founder of Perpetual Protocol, a decentralized perpetual contract protocol for every asset, made possible by a virtual automated market maker with an aim to create the world's best, most accessible, and most secure decentralized derivatives trading platform. Yenwen has over 17 years of various expertise and experience in the financial and tech industries, co-founding businesses like Cubie Inc. and Cinch Network. Yenwen also holds a MS degree in computer science from the National Chiao Tung University. And Nick is the head of strategy of Perpetual Protocol. So Nick began his career at the University of Sydney as a data analyst before moving on to other innovative works in the financial sectors, where he worked with Westpac Incubate, Kent and Lime, and Lumi Finance. Nick also co-founded Edisse, where the team invented an award-winning watch that helps caretakers track if elderly people fall, and his mission is to utilize data to achieve rocketship growth for companies. And these guys here have a really cool announcement for us today that we're going to tease right now. We'll have that announcement released later in the episode, so stay tuned. So welcome to both our guests today, to Nick and to Yenwen. So just to start you guys off with a quick icebreaker, you can answer one at a time here. So which project first spiked your interest in this space outside of BTC and Ethereum?
Maybe I will go first. I would say actually the CryptoKitty. So I think I used to build game like 10 years ago. So when Facebook launched their social platform, we actually built like several games on top of it. I mean, we actually got some success on that, and once we see like a new game on a different platform, I actually feel that is really interesting, and then really want to give it a try. So I think that's actually what CryptoKitty is the project that actually drew me into crypto.
For me, I would say Balancer actually, I think, was the one that kind of got me into it and kickstarted everything. It was just kind of around the time UniV2 had launched. There was a lot of excitement around it, and Balancer just kind of seemed to make sense from my perspective. There was kind of liquidity mining that started, and then from, I guess, like governance started kicking in, and the really new kind of, just having not experienced kind of this kind of style of governance before and participation, that really drew me in and then kind of fell down the rabbit hole.
Yeah, so really interesting perspective there. Kind of two different ends of the spectrum. One kind of introed from a gaming aspect, and one kind of introed from that liquidity protocol aspect. So cool to know. And to start us right off, so obviously Perpetual Protocol is a decentralized exchange where you can trade with leverage, but as centralized exchanges are gateways for many users into cryptocurrency for the first time. What do you believe is the tipping point where a new user will start to use and understand decentralized exchanges, and even further start trading perpetual contracts?
It's I think there's kind of two groups of users, I would say. There's the first group of users that we normally see is those that may have some form of finance background, and as soon as they start, I guess, tinkering and seeing the level of composability that happens between various protocols, that's when they fall in love. They kind of drop everything and they kind of all in. So we've seen that quite a lot. And then I guess with that, you then have engineers who just start plugging and playing everything together. And that's kind of where Perpetuals is kind of a base block in terms of how can you leverage this with a different strategy, and how do you kind of gain alpha in that way. The other side that we've seen is just people who are super interested in kind of trading in general, and then kind of go through your regular kind of Bitcoin and then ETH, discover smart contracts, kind of do a bit of trading on kind of decentralized exchanges, and then hop over when they may get locked out because of the exchange doesn't provide them anymore. They can't withdraw funds. I guess we've heard of a lot of these stories. And then that's kind of when their interest starts. And then as soon as they start learning, then again, same thing with the rabbit hole, and they kind of fall down that.
Really cool. Yeah, that makes a lot of sense. And like, where do you see, like, looking into the next, let's say 5 years, like how do you see the market share between centralized and decentralized exchanges in general? Like, are decentralized exchanges going to take over the entire game, or like will these like centralized exchanges become decentralized exchanges actually, or like what's your take on that?
I was, I mean, it's just my guess, but I would say maybe like Decentralized Exchange took probably like 30% or 40% of the market. I mean, like from the end user point of view. So most of the end users still going to Centralized Exchange. I mean, maybe not the Centralized Exchange we see right now. Maybe they go to, like the banks or like, the brokers that we actually use. I mean, like for lots of people day by day. I would say DeFi projects might be, I mean, it'll be like become the base layer of the financial system. So even only like 30% people can direct access to the DeFi projects, DeFi protocols, but most of the centralized entity actually access those DeFi protocols, and then they use the DeFi protocols. So it kind of like create this layer so they can serve their customer much better than the DeFi project itself. But the DeFi project actually bring more liquidity to the financial system. So that's actually what I believe. So less user, I mean, like directly access the DeFi project, but the DeFi protocols or projects actually have more liquidity than the centralized exchange.
Yeah, I mean, that's a fantastic point you're making there, Yenwen. Basically, you could see a world in the future where both of these centralized and decentralized exchanges work together, but maybe the user using a centralized exchange may not know that they're benefiting from some of the added liquidity that the DEXs are helping create. So yeah, definitely something cool to think about where this is going to be in 5 years. And for anyone watching right now in the audience, if you guys have questions for our guest today, feel free to type away, and we'll be sure to ask those community questions at the end of the episode here. So getting back into some more general questions, when trading with leverage, especially high leverage, there's this risk of liquidation, right? I know I'm very familiar with it. So do you believe that centralized perpetual trading exchanges could be manipulating local perp contract prices to trigger liquidation of their traders?
I think that's, I mean, I never worked for centralized exchange before, so I don't know that. But I mean, there's, it's just like this possibility that they actually can control. I mean, they can control because everything is just a black box to everyone. I mean, to most of the traders. Sometimes it might not be like the exchange itself. Sometimes it's just like, they are like huge market makers. They just want, because they will do whatever they can to, get some profit out. So they might do that. So I mean, like it's not really like, we can blame the central exchange itself. It's just like there are so many parties like like trading on there, but because it's a black box, so no one knows what happened. I think that's actually, I mean, like a DeFi system that can help. I mean, like, because everything is on chain, everything is transparent. Yeah. So yeah. So I don't know for sure, but it's just like that possibility actually kind of scary, I think.
Yeah, it certainly is. And sometimes you just feel like it might be happening if you're trading. But in the end of the day, like who knows? And it's probably impossible for anyone to really find out, except there's some insiders talking about it, I guess. the more important it is, I think we have decentralized exchanges like yours as well, where it's kind of impossible to do that. And so, like, talking about like the decentralized and decentralized exchanges, what do you think are the main differentiators and like different kind of risk profiles for someone to like choose to either trade on like a centralized or a decentralized? Like, what are the different types of risks there?
I mean, from a risk perspective, I guess you're trusting. In the centralized, you're trusting kind of the centralized entity, right? Like you're trusting and you're hoping that kind of either A, the government doesn't kind of come and shut down and then you can't get your funds out, or B, they don't shut down and kind of go under and you lose your funds. I guess the counterpoint to that is kind of you're then trusting the smart contracts from a decentralized perspective is kind of written properly, it's written well, it's audited, it's probably not going to get hacked, and it's going to do what it does. So I guess those are probably the two kind of biggest risks, I would say, between the two. And then I guess apart from that, I would say the kind of your keys, kind of your funds, as kind of a lot of people, I guess, say in industry. But I would say, yeah, those are probably the biggest two I can think of.
Okay. And talking about how will you be able to provide an equally or better UX compared to centralized exchanges? I know many users will go to centralized exchanges because of how easy they are to use. And I know definitely in the early days of DEXs when we had the Ether deltas, the fork deltas, those were not very friendly UX, right? So how will we be able to provide an equally or better UX compared to these popular centralized exchanges?
That's a good question. I think that's I would say it's probably like it probably takes some time for us to really reach that centralized change kind of like kind of a UI UX. I think one of the reasons is that for all decentralized app, we actually want everyone to control your key, your asset, your key, but this is actually really hard. The key, the key phase. How do you want to get hard wallet or not? There are lots of actually. A question that a new user will ask. When they onboard to a DeFi system, I do feel that he really takes some time to. Maybe like some other people can create a better wallet to store the key or like to kind of like split the key within like different parties, and then you can withdraw. There are lots of people working on that. But once we have that, I think we actually there are like some UX issue on the DeFi system. On blockchain itself as well. Like the block time. It's a little bit slow, but I do believe that it definitely will change. Like the new layer 2, the new layer 1 chain. So that's happening right now. So I do feel that these two parts. Once we can improve these two parts, actually, it will kind of like have the almost the same like usability like centralized change. Yeah. So I would say it just like take time. Probably a year or two. But we were actually almost there. When I first used like MetaMask, it's really hard. I would say it's just really hard, and that's actually the only choice I have at that time. If I want to access a DeFi app, but right now you have so many choices. People are working on different wallets, so yeah, definitely better.
Yeah, that's amazing. Yeah.
Nick, do you want to
add something? Yeah.
Yeah. The only thing I wanted to add is kind of there's also a very interesting and because of the composability element that we believe in, there's a design space that's opening up, which means that retail, very broadly defined, like normally in crypto, most people come in and they start with kind of the speculation and then they go then kind of deep into the tech. But the only real way they can speculate right now and kind of earn is kind of either is basically trade and kind of speculate on tokens. But if you think about the way that DeFi is going and the pace of innovation that we're having through composability, it'll get to a point where us as a protocol, we don't necessarily have to have the best UX to attract kind of retail users to come in and trade, right? Like we fully expect in the future that a large chunk is going to come from maybe 2-3 levels up, where an app is using another dApp, using another project that then kind of interacts with kind of perp. And I think the power between that means that the end retail user doesn't need to know that they're kind of using a perp, but they are, through the product that they're kind of using, or the structured product or whatever it is, they're actually trading perps. And so I think that's a really interesting kind of paradigm shift, where we don't necessarily have to compare DeFi apps user experience to kind of centralized as well. There's a different kind of way that we can approach it as well.
Yeah, that's a great point. And it could even mean that like some bigger exchanges might actually use like the benefits of decentralized exchanges as the underlying backend kind of for their centralized exchanges, or anything alike, really, I guess. Yeah, no, that's fascinating. And then like another topic I wanted to talk about is about MEV. Like what are your thoughts in general on MEV, and like how, like, is there anything you could do to protect users from MEV in general? And what's your stance as a team towards MEV?
Yeah, that's actually a really good question. So I think so for us, we don't deal with the MEV right now. One of the thing that we don't. One of the reasons we don't do that is because we're running on layer 2, rollup. So most of the rollup, they have like only like one sequencer. So you actually kind of like there's no other ways you can actually track MEV from there. But once they actually have like a network of sequencer, there is definitely MEV can be tracked. But I think the chain is working on that. Both Arbitrum and Optimism, they also like talk about this, how they are going to solve this. And from our point of view, currently we don't have a good way to really solve this. We are more like the mechanism we have right now is more like Uniswap. So I do feel that it's just like, if you want to be like more permissionless, you will like Uniswap, anyone can access that, anyone can see how the transaction goes, and then the MEV will happen. So I would say just like very hard to solve the problem, but we definitely want to work with the layer 2 providers, and then try to figure out like how we can do this.
Yeah, and that's good that you have that on the top of your mind there. It seems like a problem that's a hot topic in the industry recently, just the MEV, minor extractable value. So now getting into some of your competition. So how do you compare or compete with the likes of others like a DYDX? Are there any other on-chain competitors that you feel are in that category? And what is unique about perp.exchange that sets you apart from those others?
We get asked this quite a lot, actually. There's a lot of different kind of ways that you can kind of take a look at it. I guess the first is kind of the DYDX team. They're doing a fantastic job of kind of what they're kind of aiming for, and I would say fundamentally we've taken two quite different paths if you think about it. One is from their perspective, they are basically decentralizing FTX, right? Like they've taken the settlement layer and they've kind of decentralized that. They've still got a centralized order book, but they're in the process of kind of decentralizing that. And so they're building it that way. But I guess the path that we've taken is we've explicitly taken let's build something that's very, very highly composable with a lot of other protocols. And we've almost kind of approached it in a way of we position ourselves as kind of like a base layer. So there's probably about, I think there's about 8 to 10 kind of projects that are actively building on top of Perp. There's probably another kind of 10, 15 that kind of investigating. And we really kind of want to build an ecosystem around us because there's so many different kind of areas within the design space that you can do now with kind of everyone on the same chain, that there are things that people will start building that you just won't even think of. And we think that kind of that area is super, super interesting. So I would say, firstly, that's kind of the first area. The second area, I think, is the design that we've taken is quite deliberate. So in kind of, if you look at the progression of what we did, like we first kind of pioneered the VAMM, which meant like you didn't need kind of liquidity. But then in kind of V2, we actually ditched that idea completely and went with kind of a Uniswap V3 model. It was quite painful, but we did it, and the reason for that was quite deliberate. We found that kind of it takes the nicest characteristics of kind of both the kind of central limit order book world or the order books that you kind of see on centralized exchanges, and it also takes kind of the really nice characteristics of the AMMs versus there's kind of a lot of other kind of AMMs in market, but the problem with that is that a lot of the time your formula or your curve, I guess, is fixed, which means that kind of if someone wants to build on top of you, normally they have something that they want to express in terms of a strategy. So they think they have alpha, they want to kind of express it in some way, but if your curve is effectively fixed, you can't express it, or at least your expression is quite limited in what you can do. And by introducing V3, it was kind of like introducing an order book, but then keeping the characteristics of an AMM. So those are kind of probably the two comparisons that I'd have. One is with kind of the central limit order book kind of style competitors, and the second one is probably with kind of our AMM competitors.
Very cool. And then, so like, what are your considerations to like bid on other blockchains? Like, do you have plans to expand to like any other blockchains in general? And like, yeah, what are your thoughts on it? And why did you choose like your current setup as it is?
Yeah, that's a good question. So right now the Perp V1, Perpetual Protocol V1, we is running on Sky. So it's we kind of like one of the first like financial project, DeFi projects running on Sky. It's been like working well like for I think almost a year. So really cool. I mean like a cool chain. But for our V2, we actually try to work on other layer 2 projects. Work with other layer 2 chains because we actually want to access more DeFi projects on other like layer 2 chains. So we are actually deploying on Optimism, for our first like deployment for the Perp V2. And we also like looking at like Arbitrum and also other like layer 1 like Polygon. One of the constraints we have is that the Perp V2 is actually built on top of Uniswap V3. So because Uniswap V3 only deploy on Optimism and Arbitrum, so that's the chain we have to go. Right now. But there is a new vote that is actually ongoing that they probably will deploy on Polygon. So yeah, if they deploy, we definitely will be there. So in the future, we do want to be like on the place that where like Uniswap V3 has deployed, and then we just want to access more user. On that on different chains as well.
Yeah, great insight. So we can basically follow along what Uniswap V3 is doing to kind of foreshadow where Perp is going, right? So, and we're getting, cool. And we're getting some great questions from the audience here. I already see 2 quality questions we can save for later, but if anyone else has anything, feel free to ask now. And now's the time of the episode. We're going to get into an exciting announcement. You guys have some really groundbreaking news you want to release to us today. You kind of already talked about it a little during the previous answers, but why don't you go ahead and make that announcement now?
Sure. So I mean, like we have like announced that we are working on this like Perpetual Protocol V2 for a while. I mean, we first announced it like in June. So I think it already been like for 5 months. I mean, after we announced, and then we have been like through like internal cascading, like public cascade trading competition. We have like so many events. We have been through actually 4, audit. Until now. So I've been working on this like for quite a long time, and I'm really like excited to say that we are going to launch it actually this week. So I mean, like it's I kind of like really excited because finally, it's really, kind of like everyone on the team like put like 100% of effort into this project, and we do feel that they actually solve a lot of problems. Either on like our V1 or like compared to like most of the perpetual contract like projects on the market right now. You actually have an age that you have a lot of freedom to, provide liquidity. You have a lot of freedom to trade. It's just like we do believe that it's the next level. Like product. So really excited to announce it that we are going to launch it this week.
Let's go V2. I'm excited for it. Let's go, guys. V2.
Yeah.
So that's awesome. Let's keep an eye out for that, and more news coming this week, guys. So all the audience, stay tuned. Get ready to access V2. So now getting into more questions focusing around perp.exchange. So on the exchange currently, most assets are available to trade between 1x and 10x leverage. What's the logic behind those limits, and will we ever see an increase in leverage to say 100x and beyond?
That's a good question. So we actually, 10x is actually really conservative number from what we can do. Especially we have been like running V1 for a while. We know like how the liquidation really work in the real world environment. So we actually have 1 vote trying to increase that. So, but actually the community doesn't want that vote. So we want to increase from 10 to 20, but it actually got rejected. Because like some community member, they're afraid that you actually kind of like and people might get wrecked because of this, because they see that it's higher average, it's just like all in. So a lot of people, our community express that concern, so that we don't do that. So it's actually 10x. I think most of the community member, they feel it's fine. We might have another vote in the future trying to increase it, but just like it's a decision from the community. So if they want to pass, have that, then we will definitely happy to do that. But right now, I think people are happy with 10x.
That's cool. Yeah, I think a lot of people are waiting for it. Cool. And then like talking a little bit about staking, like what kind of role does staking the perp tokens like play in your ecosystem, and also like how is that going to change and evolve over time? Like are you working on any other like staking models, or like where do you see that like in the coming years? Staking as part of the protocol.
There's a lot that kind of plays in with the staking piece. Currently, at least for V1, we use it as kind of there is kind of rewards for stakers currently. So stakers currently act as the backstop, and what that means is we have a liquidation fund, and the liquidation kind of the insurance fund. The insurance fund is there in the case where we can't liquidate things fast enough, and we have to kind of repay bad debt. So very similar to kind of almost identical, I believe, to centralized exchanges. What happens in the case where the insurance fund kind of goes to zero is that the stakers effectively get slashed. Currently more tokens are printed, and so the stakers have kind of a risk because their tokens are locked in for 7 days. To compensate for that risk, we have there's basically kind of rewards in kind for perp that are paid to the stakers. In the future, there's a couple of things that is going to happen with this. So I guess in the shorter term, there is a lot of kind of reward programs that are coming out that will require some form of staking to kind of unlock various levels. That's kind of the first thing. And then I guess from a tokenomics perspective, this is kind of still being worked on, so it's not the final one, but one big area that we're very, very bullish on is kind of the private markets. And private markets for us is think Uniswap, but kind of, I guess, for perpetual markets, which is anyone can kind of launch a set of markets without having to go through some form of governance vote. So you look at everyone that kind of is in the decentralized space doing perpetuals right now, it has to go through some form of governance vote for a very good reason, which is that if you just launch any old kind of dog token and that goes to zero, your insurance fund kind of gets impacted. And so there's kind of a risk element here that you kind of have to figure out. Private markets is quite neat in that you can isolate that insurance fund, and we kind of expect in the future private market DAOs will be interested in kind of launching, running these kind of markets. Now, what they'll do effectively is they'll take the staked perp that they have, and they will stake it again into this private market. So they act as the backstop for the public market as well as the private market. So there's additional risk. To kind of compensate for that additional risk, we basically give them a larger portion of the fees that are generated from that private market. So if you think about from a staker perspective, your risk in the kind of the next version is going to look like if I stake and if the insurance fund goes to zero, then I probably have similar to an Aave model is what we're thinking, where you might have a percentage of your perp slashed and burned and then kind of repaid to repay that debt. To compensate, you receive kind of a percentage of the public market fees. And then further, if you then stake that into private markets or start a private market, you then get another fee income stream from that private market as well. So those are probably the key ones. And then obviously in the shorter term, the rewards piece, there's a couple of rewards programs basically that are coming out that require staked perp.
Yeah, it seems like a lot of really various risk and rewards available for the different staking types that are that you just outlined there, and really interesting to hear about the insurance fund and the different slashing that could happen to the staked perp when the insurance fund gets depleted. We would love to display some of the staking type and the staking information for perp on staking rewards, so I'm sure we'll have a conversation after this. But getting back into it here, so looking on the site here, perp.exchange, I see that you guys are sort of advertising zero gas deposits. Can you just tell me a little bit from a layman's perspective, what is that exactly?
Oh, that's a great question. So it's a feature that we actually pay the gas for you if you want to. So like if you want to deposit, I mean like your USDC into our system. Like I mentioned before, the exchange is actually running on Sky. So it's kind of like a closed-chain operation that you want to deposit funds from ETH to Sky. So we actually pay that fee for you. So if you want to deposit, if you want to give it a try, give perp a try, you want to deposit 100 USDC, it's actually gas free. So you just like click down that button, like fill in how much USDC you want to deposit, and then click on deposit, and then you actually zero gas to do that. So we use like make out transaction to do that, so you pay nothing. Yeah.
That's amazing. Such a great feature, I think. People appreciate that. So, like, in general, like, what is your big vision for Perpetual Protocol, and like, how will it look like in the next 5 years? Maybe you can talk a little bit about the mission and like the big picture. What are you trying to achieve over the next years here?
I would say there's kind of, if we started kind of the reason why we started perp, I guess there's kind of two areas. The first is kind of accessibility. So just kind of coming from kind of TradFi, I guess, a lot of products are kind of quote unquote only for sophisticated kind of investors, and sophisticated just basically means how much money you have. And so accessibility was around kind of how do we make these products kind of more like just so anyone can kind of access them. And then the second thing that kind of came with that is kind of simplicity. So how do we have products, or how do we have an ecosystem, or how do we create something that at the end of the day is quite simple for an end user to use? Again, a lot of these kind of financial products that are kind of gated, I guess, are very, very complex. And it's usually kind of geared against you. So by combining these two, we were really thinking about how do we allow anyone and everyone to kind of have access. And so you can see it in kind of the strategy that we've done. One is from like a product design. How do we make things as simple as possible? How do we kind of think about the UX in terms of the interactions that a user has, and how do we kind of build a really, really good product in that way? And then the second thing, which I guess we're doubling down on, is the composability piece I talked about before. So how do we create a product where anyone will kind of build on top? And effectively, I think in the future, this is my guess, and this is kind of my personal guess, like I suspect that maybe you'll see a very, very large amount of volume that will utilize perp, but the end user doesn't actually know. So it might be some form of structured products, or some really, really nice structured products. Maybe it's a CDFI thing that we were kind of alluding to before. We really don't know, just because there's kind of no precedence here, but we're very heavily invested in kind of this piece. And so I think in the long term, if we see more and more builders kind of building on top of perp and the ecosystem, and that kind of volume kind of growing, that's kind of where I'd love to see kind of things go in the future.
Yeah, and that seems to be the theme I keep hearing from both you, Nick, and Yenwen, that you're interested to have other projects build on top of perp, and you think that's where the main use case and the main liquidity draw will come from down the line. So really cool perspective. I've never really heard that coming from an exchange before. So let's keep an eye on that space. So last question here regarding perp, and then we're going to move into the community questions before we wrap. So this is just basically a team question. So how is your team currently structured? Are you going to be entirely decentralized as a company? Is that even desirable? And should there always be, a person in that someone could contact, like a support contact? Does that exist?
Yeah, that's actually a great question. So, our team, we actually have like around 30 people right now. So I think 20 of them are engineers. We start. Okay. So we have so for the 30 people, we actually have like people from the community, and also like the people we recruit. Mostly engineers, and actually Nick is actually someone from the community. So we met in our early days, and then Nick is really patient about this, and then we just like work together. So so he actually kind of like joined the team, but we do have like several people like coming from community. As for the kind of like if someone want to ask a question, who are going to kind of like answer that, we do have like one person that's working on the community, but he actually kind of like have this set up that they are like people from the community that they actually join our kind of like Discord, and then we have a group of people. They actually help the either new user onboard them, or like they answer the questions, and we have kind of like not a large amount, just like the amount of like per token, like I think every month, to just like reward the work. So it's just kind of like a core group of the community user who want to actually help out others, and then they can actually go to this place, and then they kind of like help others, and then we use a kind of like an app called Coordinate, and that app actually can kind of like you can actually vote on others like contributions. So they actually just work that way. They can vote on each other, and then create some incentive for them to help others. But I think that's just, I mean, we want to be like more like not really decentralized. We just welcome like the community to join. I mean, join these projects, and then either they build, either they actually help others. So that's just like the way we want to go.
That's great.
I do think. I was just going to add. I do think like decentralization, there's still kind of no blueprint of kind of how you do it and what's the best way. And I guess the way we think about it is there's almost two opposing sides, right? Like you can decentralize, but then your speed of kind of shipping and speed of innovation kind of crawls to zero. And on the other extreme spectrum, you're fully centralized and you can go as fast as you want. And I guess the way the state that we're currently at, we're experimenting with kind of ways of how we decentralize. So we have a grants committee that's kind of fully run by the community right now, that has kind of approved a budget from kind of the DAO treasury. We're in the process of spinning up another 2-3 of these kind of sub DAOs, I guess. So the idea is to kind of constantly experiment and see how we can improve and grow the community and decentralize, whilst trying not to sacrifice that speed as much as possible.
Yeah, that makes a lot of sense. And as you said, like there's no perfect solution for decentralization, and it is a process over time anyway. So yeah, sounds really good. And we are ready to move to some of the community questions, I think. Thanks for putting all the questions down. If you still have any questions, drop them now. So the first question is from AOW95. I believe that's Alan. And his question is like, the only reason I use SEX is to withdraw Fiat to my bank account. Any on-ramps or off-ramps for Fiat that you are considering? So are you working on Fiat on-ramps or off-ramps in general?
That's a good question. We are not working on that right now. So, I mean, I think most of our focus is on to build the Perp V2 right now. So, but I mean, that being said, we know that it's actually an important thing to us. So we actually want to work with some other partners. I mean, we talked to some of them before, but we don't really nail down like which one we want to work with. So I think after Perp V2, we will definitely, I mean, like talk to these like Fiat on-ramp or ramp partners again, and then try to figure out that what's the best way for us to provide this feature to the community. Yeah.
Yeah, something that we could maybe see an update down the line on. And the next community question is from Xijin Cheng. Do you think AMM is important to win the decentralized perpetual market?
That's a good question. So, okay, so it's personally, I think that it's really important. I mean, it's just like it's just my personal view, but it's really hard to beat. I mean, if you want to win over like central exchange by providing a better order book, because I mean, order book you need like really fast like execution time. I mean, even if we have like the new solutions, new chains that you can process like several thousand like transactions per second. I mean, even if we have that, it cannot compare with what FTX or Binance can process per second. It's just like it's just a huge gap. I don't really think that. I mean, it's just against the rule. I mean, like if you want to have a decentralized system, it's just something you have to give out. I mean, the speed, the bandwidth. So I do feel that if we want to, I mean, win the centralized, or like a perpetual market, I do feel that the AMM is really important. I mean, like it will not be the order book. It will be the AMM that can be like decentralized, like what we have the system. I mean, trustless, permissionless, this kind of system that we have now, but still, can scale. Yeah.
Well, thank you for that answer there. And thank you for all the insights that you guys have shared with us today. Again, we have with us Yenwen and Nick from Perpetual Protocol. And if you guys could just give us briefly some areas where people can go to follow you and find more about what you're working on.
Sure. So our website is at perp.fi, prp.fi, or perp.com. Yep, so that works. And we have like our exchange, perp.exchange. So you can go, just go and check it out. If you have any questions, like we have the Discord or Telegram group link, on our website. So definitely welcome you to, go there and ask any questions. Our community definitely will help you.
Awesome. We'll be sure to head over there and ask our questions, join the Discord, and join the Telegram. Well, thank you for watching, everyone. Be sure to check out our previous episodes of Staking Mondays, and be sure to read our SR20 index, which was recently released. You can go on over to stakingrewards.com. In the top header, just click on SR20. You can find out all the information there. So please like and subscribe to our channel. For Mirko, I am Ken. As always, happy staking. This episode was sponsored by pStake, a liquid staking solution for the Cosmos ecosystem and beyond. Take care.
Thanks, guys.
Thank you.
With pStake, users can stake assets like Atom through the pStake protocol to gain staking rewards. pStake users also receive a wrapped asset, which represents the underlying staked asset. These derivative tokens can be used on Ethereum-based DeFi platforms, with support for more networks in the future, so users can maximize their yield by providing liquidity on DEXs. They can also be used as collateral for loans and much more, in addition to receiving staking rewards for the underlying asset. Why choose between staking rewards and DeFi opportunities when you can have both with pStake?